Okay, it's time for another episode of Ask the Experts here at MoneyWatch. I'm Jill Schlesinger.
I'm Jack Otter.
You are Eric.
I'm Eric Schoenberg. Last time I looked.
You had a moment there. Okay, guys, we've had a couple of topics this week that have attracted a lot of attention on the website, and I think we should go into it because there's some fire in the belly of MoneyWatch users, and there are some questions about mortgages and credit cards, both. So kind of in the same outstanding debt issue. Let's go into some specifics. First of all, we know that a whole bunch of folks owe more on their mortgage on their homes than their homes are worth. About a third of all borrowers owe more than their house is worth. So that's kind of bad, right, Jack?
That's not good.
Yeah, that's not a good thing. And by the way, that's not just people who were dopey and did dumb things and bought a house they couldn't afford. That actually includes a lot of regular people who maybe refinanced and took some money out. There are certainly plenty of people who refinanced, took their money out to put their kids through college. And, circumstances in each case very different.
Or in some markets, people who bought 5 years ago in Vegas or Florida, their primary residence, they could afford it. They can still afford the payments. The problem is they see themselves paying for an asset that's worth a heck of a lot less than they actually owe.
And so, Eric, I went on the early show this week and I discussed this idea of strategic foreclosures, exactly that issue that Jack just brought up, which is, I can afford to pay my monthly nut, but actually it may not be really smart for me to do that on a financial basis. Maybe I should walk away. And this even elicited a lot of comments to you about what a horrible person I am for suggesting that. Is that right? Did you field a few?
Yeah, I'm sorry, Jill. People are on to you now. But actually, this is a very interesting question that you've raised. It kind of goes against the American way. The American dream is that the home would be the asset that you valued most and that you would do anything to pay off your mortgage, even give up your cable subscription. But I know, shocking. Now, people are looking at this in a cold financial light. We don't have debtor prisons in this country. We don't even have recourse loans on many mortgages. And so the downside to walking away from a situation that would take you years, decades to get back to even on is suddenly a proposition that people will consider.
And the reality is, and one of the things I think is a pretty smart financial planning way to look at it is you take a look at your current situation and you say, let's say I'm paying $3,000 a month to service my loan and I can't afford it, but I'm underwater by maybe more than 20 or 25, even 30%. And I make a decision that over the next maybe 10 years, I would be far better off renting. I in my local market, assuming I don't have a landlord who's going to hold my walking away from my loan against me, and that's a big assumption, I know, but maybe I could rent for half as much money. And that, to me, seems like a smart business decision to consider. Companies make these decisions all the time. We had a huge real estate deal go bust here in New York. The Tisch family had acquired a massive real estate investment, $5.4 billion. They borrowed $4.5 billion. They put a few $100 million of their own money. They walked away. So why, Jack, are people so insanely judgmental of that as a decision?
Well, we have a strong Puritan moral streak running through this country, and it served us well in a lot of ways. And I think that right now people are saying these other guys who want to walk away are not taking responsibility for their action, for buying this house. They need to stick to it. And I don't want to poo-poo that attitude because I do think it's an important part of the fabric of this country. And if we should say get rid of it, then we might get rid of it in other ways that would be dangerous or uncomfortable. So I don't want to downplay that. I do want to suggest that it's a funny, Eric used the word hypocrisy earlier, but it's a hypocrisy in a non-self-serving way in the sense that we do allow corporations to do something, and we think that's okay. We say they should be allowed to do it. Hell, we should lower their taxes. And yet, we shouldn't be allowed to make that same cold, calculated economic move, which is a funny discrepancy.
Well, the people who are angriest, obviously, are the people who did struggle to pay their mortgages and have done everything right, and now they're beginning to feel a little bit like suckers. And that makes people angry. It's not hard to understand.
I think we can also bring up the economic argument for not walking away, because 7 years is a fairly long time. I mean, I don't expect that the real estate market is going to come surging back anytime soon. But let's say it goes down a little more in 2010. Let's say it's flat in 2011. In 2012, it turns up. Rents start going up. So suddenly your rent is no longer half what it was. Maybe 10 years from now, you could be back to even. 20 years from now, you would have forgotten this blip. I mean, if it's a primary residence and you can't afford it, I think there's actually a fairly solid economic argument for just staying put. And yes, it's too bad that you didn't get that beautiful 10% a year appreciation we all saw, but you may not be worse off 20 years from now. In fact, you might be better off by not selling low, which is what you're doing by walking away.
One other thing to consider is that if you believe, as many economists do, that a wave of inflation is coming, well, a home is actually a pretty good inflation hedge, especially a leveraged home.
And that monthly payment is going to get cheaper and cheaper. Even though the amount stays the same, those dollars are worth less.
Well, as long as you have a fixed mortgage and not an adjustable rate.
Yeah, I think it's a little bit of there's a difficulty here because so many of these mortgages are variable and people can't fix them because they're underwater. So they don't have an opportunity to actually lock in a 30-year 5% mortgage, and that's part of the problem also because you're right in terms of your inflation analysis, but we'd be wrong because if inflation explodes, so is the rate on my mortgage going to explode, and that's a problem. I get back to this. I talked to an estate attorney and I talked to a bankruptcy attorney about this, and I wanted to really understand, are there cases where people really are better to walk away, even declaring bankruptcy? And the bankruptcy attorney said to me something that was very interesting. And she said, people don't want to do this. I got to tell you something. People walk in here, there's great shame. They've lost a lot. It's not like they fooled the person who's been the good payer. They have paid a terrible price for their previous bad decisions, okay? And now as the attorney, I walk in and I say, what is the best advice for you? And she said that if I can prove and demonstrate to them with the right numbers in front of me that, in fact, a bankruptcy or walking away is going to likely be better for you. And she goes, sometimes I do it because I think they're going to go out and do the same dumb thing all over again. And so I don't want them to get credit for 7 years. That's actually a good time frame. She goes, I think that's actually a very good rule. And she said that when the people even see the numbers on the page, they still don't want to do it. I think when I talked about this on the early show, it was an emerging trend, but it's not like taking off. It's not like everyone's walking away. And most of these people, I do think, have paid a very steep price for their mistakes. So I'm not so judgmental. I'm going to give you some questions. Ready? You guys ready? Stay
Fire.
ready.
Fire.
Here we
Fire,
go.
Jill.
All right. So Angela wanted to know how we feel about short sales. And so Eric, what do you think about a short sale? That's basically when you sort of negotiate with your lender and you say, I'm going to sell my house for less than my mortgage is worth. And if you sign off on it, it'll kind of be better. And you don't want to foreclose on me, and I don't want to be foreclosed upon. And there's like a nice, you sort of release me from any future legal obligation. You like short sales?
Yes, I like short sales. Much prefer it to a foreclosure.
And
if you can do it, but not every bank will go along with it.
Right. And one of the things that Angela wanted to know is if she does a short sale, she kind of was like thinking about doing it, and then she just walked away because the bank wouldn't respond. And she said her bank came back and now says 2 years after she left, she must still own the home, we're assuming this, that the bank now says they want to settle with her and so she can keep her home. She left. She's living a different life. What do you think, Jack? Should she try to now start all over again with the bank?
Absolutely. I mean, it depends on what sort of a deal they're going to offer her. As a service operation, we always hate to say this, but in this case, she does need professional help. She needs to go in there with an attorney, a real estate attorney. But what's great about short sales is that they actually start to bring us back to reality. They take asset values back to where they should be, and everyone shares the pain. The bank takes a hit because it made a bad loan. The homeowner takes a hit in the form of bad credit. And ultimately, if they do sell it, somebody who can actually afford the thing is buying it at a price it's probably worth. And so the sooner that, if all banks could just do short sales right now with all the properties on their books, yeah, that would take 2 years, but we'd be back to where we should be in the real estate market, and it would find its bottom quickly, and then people could could afford houses and they'd buy them.
Eric, why aren't they doing it more?
Well,
the banks.
I think Jack raises a good question. Makes a good point in that, in terms of policy and how we'll actually get out of this crisis, when banks are willing to take a haircut on the principal amount of their loan, that tends to be a much more successful solution than lowering the cost and modifying the loan in the way the government is now set up. By lowering the principal cost, you get people back from being underwater, so they no longer have an incentive to walk away from the mortgage. It does lower their payments, obviously, because they're paying on a smaller body. And now people have an incentive to stay in the house because they have some equity or close to having some equity. It's a way of accepting the real reality is the loan isn't worth what it is. And when you foreclose on the house, the bank loses so much money, they might as well cut the principal. There are obstacles, technical obstacles, including what you do with the second lien on the house, which applies in many cases. But statistics show that in cases where banks do cut their principal as part of a loan modification program, those people are much less likely to re-default. So it seems to me that somewhere in there lies the solution to this problem.
And by the way, the MoneyWatch blogger Elise Glink writes about this constantly on her blog, Home Equity. So, Roland, can you do me a favor and pop up this one? Because Elise is a real estate expert. And, one of the things she's bringing up is a recent trend by Citigroup, a deed in lieu of foreclosure by Citi, offering borrowers 6 months free rent. So a deed in lieu is a little bit different than foreclosure. It's kind of like a negotiated settlement to some extent. And by the way, all of these settlements, all of these different processes really do require you seeing an attorney and sometimes a CPA, because there can be tax implications of some of this. Some forgiveness of debt is actually considered taxable income if it's not your primary residence. If it is your primary residence, there have been some exceptions that have been enacted. But the reality is, Citi goes and says, okay, we want to play with you. We're going to let you stay around for 6 months. Why, Jack? Why? What is in it for them? Because they're not doing it because they're kind souls.
No?
No, Vikram Pandit seems to be a nice guy, but I don't think he did this because he feels bad.
Well, then my second theory is that, as we were saying, they're smart enough to realize that they have an outstanding loan on an asset that's not worth the loan amount. So the worst thing that they want to do right now is simply admit that, write it off, and take the hit to their bottom line. So, for one thing, offering this just extends the pain out for 6 months. They don't have to worry about it for 2 quarters. So that's an advantage right there. Number two, you can hope that either the owner's financial situation changes, they're in a better position to pay it off. Maybe we get a little inflation that brings the prices up. Maybe the real estate market turns around. I don't think any of those things are frankly likely, but from the bank's perspective, it's better than dealing with it right now.
Eric, I think they're calling this extend and pretend. So you extend this out a little bit and you pretend that the loan that you're carrying on your books at $200,000 really isn't the $150 that you're probably going to have to take it down to, right?
Yes.
And so the banks are, I guess, this is shocking, self-serving in this.
Shocking. Yes, but it sort of ties in with a trend that we've seen throughout all responses, or many responses to the housing crisis. Is let's kick the can down the road. Let's. I would say that the government's loan modification program is a lot of that too. Let's just get people into situations where we put off default by 18 months or 2 years. So, another reason the city might want to do this is that in a settled, we'll get you out of the house in a settled way. We'll be peaceable about it and let's be civilized. In such cases, it's likely that the homeowners will not trash the house the way they might if they walked away in a foreclosure, and then the collateral that the bank collects is in better shape.
Yeah, like that we can make it a big party house. Got to find one of those. One of our users asked about the impact on your credit when you walk away. And Elise said this when she was on the show last time, that basically your credit is trashed for 7 years. Although there have been cases where FHA, which does, the Federal Housing Authority, does actually create some exceptions for that, making it a 3-year period. I wouldn't actually count on 3 years. I would really stick to the 7 in my mind if it improves before then, because I think every lender in this next group of years is going to really be a lot more careful. And you'll pay the price for walking away, and that's a steep price. So we get that, but I wouldn't count on a 3-year deal. I think it's more like 7. So let me read you something I got from my blog post about this. In addition to being over 20% underwater on my mortgage, I also find my wife and 3 children are placing a great deal of stress on my finances while I'm able to make ends meet. I was wondering if it would make more sense to just walk away from my family, or maybe I could keep my wife but put the children up for adoption. Okay, dripping with sarcasm. Why does this guy care if someone walks away? Why does this guy take the time? He sees me on the early show. He reads my blog. Why? In fact, it wasn't even my blog. He literally fired off this really angry email to me after this segment. Why do they care what someone else is doing? Eric, what is up? Is this like just puritanical? Is this how has it turned into like I'm just alone is the exact same thing as walking away from your children?
Oh, I think that it is. It's like what Jack said. It is partly puritanical. It is partly habit, and I think, as I said before, that he feels like he's not getting any credit for having paid his mortgage, having been a good citizen, made the sacrifices that you have to make to meet that mortgage nut, and he sees people who are walking away from their mortgages not as victims of a corrupt system, but as people who are taking advantage of it and making people like him look like suckers.
But he's fine. In other words, this is what I don't get. I mean, I'm really just not a good person, obviously, because I'm not judgmental like this, and I don't feel that. But why do I care if Jack walks away? If I'm in a good financial position, I don't care what he does with his life. Why should I care about that so much? People make, my friend who's a lawyer, they always say contracts are written to be broken. Contracts are amended. You don't go to jail for breaking a contract, by the way. That's all this is. We're changing a contract. And people are so fired up about it.
I think this is exactly the same dynamic you're seeing in politics right now, where people are so angry. We've talked about how they have contradicting demands. To get really political here, some people wonder why a male in Arkansas is worried about a female's doctor visit in New York. And yet we know
Are you talking about someone in particular?
I'm talking about the abortion issue.
Right.
And we could list 10 other issues where people are very concerned about what other people do in private. This has been going on for a long time in this country, and it's not going to go away. And you don't have to agree with it, but it is there, and for better or worse, our politicians are going to have to take this attitude into account when making policy.
I also want to just point out that Jack is be running for office next year. And,
Yes,
so
right.
Please send your campaign contribution, too.
Not on the right to life ticket, however.
Yeah, clearly.
Behavioral economics has shown that people have a really well-developed sense of justice, and that people will hurt themselves rather than allow what they consider to be an unjust situation to continue. And I think that's part of the instinctive, gut-level reaction that we're seeing to this proposition of strategic foreclosure.
Well, I think it's all very interesting to me. I sort of feel like if we can get and let's look at the big picture. What will improve the economy that will touch me fastest? Clearing out this overhang of housing. And the best way to do that is to really say, cut principal, let these foreclosures happen, let the banks get really worried that people are just going to walk and they'll be stuck with this thing. And now they're in the game and they got to play, right? And so in the end, we really just want a stronger economy for all of us, especially if you actually have some money and you have lived a life that is consistent with the American puritanical, right way to go. And everyone will be better off.
And actually what's funny is that in the rest of the economy, these things move real fast. It's housing that is so sticky and so slow to get through this, partly because of this attitude.
Okay, let's shift gears a little bit because Megan's giving me the uts right now. So credit card reforms take effect next week. A lot of talk about card issuers are getting around reforms. Again, I'm shocked. They're going to have new and different fees. It's terrific, isn't it? They just always find a way to make money. Many MoneyWatch users have been telling us that they're ditching their credit cards altogether. Listen to this guy. My husband and I received a letter from our credit card issuer in November informing us that our fixed rate would be converted to a variable rate and that our interest rate would be doubled. Our response was to reject the changes, close the account. Therefore, the only gift under our Christmas tree this year was an elegantly wrapped package containing the now useless credit cards. Rather than contributing to the annual festival of consumer frenzy, we decided to give ourselves the gift of freedom instead. Credit card confetti. Priceless.
Wow.
You
Here
like that?
is a streak of Americana I can really buy into. I mean, I think that we've seen the culture of buying and shopping develop over probably the past 20 years of loosening credit. And if we can turn that around, it's going to be a little bit painful economically, and boy, will it be wonderful for this country, and I think put us in a much more solid economic position going forward. I applaud these people, and we can get into the nitty-gritty of why you might need a credit card and so forth, but in terms of a general trend, I think it's fabulous. Hey, we should only buy things we can afford today.
Well,
I agree with that. Although I would say that a lot of this couple's source of anger seems to be the fact that the bank changed rules on them midstream. So there's a sense, again, we're going back to that sense of injustice, and therefore I'm not going to do business with them anymore. And if these were people who actually managed their credit pretty well and didn't have a huge balance every month, then I think they're kind of shooting themselves in the foot. A
Right.
bank card is a convenience.
That's it.
First and foremost.
That's it.
And so why deprive yourself of that because you're angry at the bank?
If
So-
that's what it takes to change the culture, I say all for it, but you're absolutely right. They're great tools. Use them correctly, and they'll be very helpful.
So a lot of people are just going to cut up their credit cards. We know that the amount of credit outstanding is really becoming, is lower and lower every month. The numbers get released. Since a lot of outraged customers have been shredding their credit cards rather than enabling greedy bank practices. This is just from a user. This is not my term, my words. MoneyWatch user says, I've noticed several news stories devoted to informing the public of the negative impact on credit scores as a result of closing an account. So what? Seems like the trade-off could be worth it. Who cares? Close an account, impact on your credit score, but I don't have the account open. What's the difference?
I would say the trade-off is between self-control and your credit score. So closing out an account is a way to cut up your credit cards and put them under the Christmas tree, in all but name. And and that is a great way to keep you from spending. If you need to do that to keep yourself from overspending, then more power to you. But credit scores, a major input into the credit scores is the amount of credit available to you. If you close a card, you have less credit available to you, and it makes it harder to maintain the score. It's a trade-off. If you're having problems keeping your spending down, then depriving yourself of the temptation to go into debt, it's probably worth it.
Absolutely. And if this person has 5 other credit cards, then they're still going to be okay. If you've got a refi coming up next week, I have one tonight. So, I didn't do a thing. I've got an old Target card I signed up for because it saved me $40 a year ago or 2 years ago. And I plan to close that out, but I didn't touch it with an actual credit event coming up. Once I get through this, I'm going to close it out.
Jack, how long has it taken you to refinance? Let's just be honest here. How long?
Almost 2 months. It will be 2 months
Oh
on
my
February
God.
22nd. Yeah.
That's a long time. You got to be patient. All right. So in closing, we like, so to speak, in closing for Jack's closing, we want people to use their credit cards more responsibly. And if that means that you really, it's like kind of like diet. If you need to take the temptation out of your refrigerator, then do it. Take it out. We don't care. Your credit score is probably not going to change by that much. But you're right, Jack. If you do have some refi coming up, obviously pay attention to that. On the foreclosure issue, I would like to just give you one quote from somebody who is talk about hypocrisy. I just want to leave you all with this, which is, here's the quote. Any homeowner who can afford his mortgage payment but chooses to walk away from an underwater property is simply a speculator and one who is not honoring his obligation.
A speculator.
Now, what's really humorous and hypocritical about that is that Treasury Secretary Hank Paulson said that, and he didn't seem to find the hypocrisy when banks did the exact same thing. And by the way, in a much bigger way.
Yes, well, I think Hank Paulson's fortune is built on speculation.
Exactly. And by the way, speculation is actually not a terrible thing, and it's not illegal. It's just that we want people to take responsibility for the fact that everyone's doing it. So banks, maybe the U.S. government to some extent, individuals. My feeling is this, guys. I just think that everyone needs to kind of chill out, not worry so much about what someone else is doing. Take care of your own financial life, and I promise you, everyone will be a lot happier. Can't we just all be friends? Can't we all just love each other?
If we can leave people happier as a result of this Ask the Experts, we've accomplished a lot.
Indeed. So on this note,
Jack Otter.
I'm Eric Schoenberg, still.
And it is Ask the Experts, and send us more of your questions. We love them. Ask the Experts at moneywatch.com. Thanks a lot.